Future Now Show. Brought to you by the Club of Amsterdam.
Well, first of all, the Asian trading space is and has begun already some time ago, long before a Trump presidency became relevant, to, for example, the ASEAN group and other initiatives to begin to self-define them as, for example, Southeast Asia, as East Asia, and so on. And they have been quite active in beginning to emerge as one landscape of trade, one landscape of how they protect their economic future and how they build forward on that economic future. So the um, breaking of agreements, which by the way is not something that Mr. Trump is starting. That started long time ago, when, for example, the Bush administration unilaterally, if I may add, broke some agreements, for example, with Russia, more in the area of defense, but nevertheless, breaking agreements is a little bit a product of time right now, and so I believe the effects on Europe will be none, because Europe is beginning very separately from the United States to build their own agreements, to build their own problem-solving strategies in the area of trade, economy, and so on. So I think the effects will be very little. Well, we had for quite some time world reserve currencies. That the US dollar is not the first one. In fact, the British pound used to be the world reserve currency based on the British Empire, which was Asia, which was North America, which was Europe, and so on. So it took a while actually for the British currency to give away to the U.S. currency, and it only became possible, really possible, with the emergence of the petrodollar. And it was very much in the United States' interest to dictate their currency to be a world reserve currency so that they could finance their debt, which obviously everyone knows is spiraling. And because their debt financing was based on having the status of a world reserve currency, they are now must protect that status. And if they do not protect it, then that has a number of consequences, which will be very, very difficult to manage for the United States, which now breaches basically the 20 trillion barrier in debt, which really means that the majority of tax income is not going towards anything that benefits the citizens, but is only financing the interest of debt and making new debt. So the role is a complicated one, because it was supported mostly on exchanging crude oil, and the age of oil is over. Now, you may argue that we have cars every day that go to gas stations and pump them full of gas and so on. That is all true, but the very near future is going to have some huge trend changes. For example, all you have to do is take the last 20 years of automotive manufacturing, and draw a consumption signature over all vehicles sold, which, by the way, is almost 70% of the total crude oil consumption. So it's a very, very significant aspect. And look at the consumption signature, and then look at what the forward signature is. And every month, given that transport vehicles, cars, and so on are in use for about 20 years on average, move that model 1 month forward and drop off the high consumption in the back and move in the super low consumption on the front end all the way until about 5 to 10 years from now, when the market really is going to move strongly into electric vehicles. So we already have that all set up. For example, if you look at the investment that are made by all the car manufacturers, you look at what is earmarked for what are they putting money in, you will find that, for example, almost no money is being spent in the development of four-stroke engines, which are those that are burning fossil fuels. But there is lots of investment made in, for example, carbon fiber technologies, into battery technologies, and anything that is associated to electric cars. So we know that the consumption of crude oil is going away. We also know that there is an emergence of other technologies to generate electricity. So coal and oil power plants will basically be completely replaced by other technologies, such as, for example, fusion technology, which even GE says is ready to go in about 8 to 9 years commercially. Well, what that means is that, for example, a glass of water like that could power the electricity of a fairly good-sized city for a month, using water as a source of energy. So these are all technologies that are moving forward. So whereby fossil fuel energy related support of the current world reserve currency, the dollar, is completely eroding. So I think if Mr. Trump would like to support the dollar as a world reserve currency, he must come up with other ideas in how to do that. Oil will not be the right one. So the question is, how can he do that without the collaboration of other nations? Because other nations are ready, for example, Russia and China are ready to deal with yuan or even rubles. In fact, before the Trump election, actually, China and Russia had engaged in a number of key meetings, partially under the BRICS association, to prepare to scale back the influence of the United States. Possibly under a Trump presidency, the relations between the United States and Russia will be as such, where Russia may accept the going forward as a world reserve currency. The question is, well, whether the rest of the world will accept it. So there are a lot of very unsolved questions at this point, and the answer forward is it does not look good for the dollar long term. In the short term, I think the dollar will be defended through the rather strong rhetoric of Mr. Trump. The financial markets, the bankers, the defense industry, and Russia, they all like his talk, and that might be a plus. I don't think, however, that is a sustainable strategy, and I believe we will see over the next 4 years, if Mr. Trump, in fact, will be president for the next 4 years, then I think there will be a number of changes. For the even medium term, I do not see that the dollar will be able to defend its role as a world reserve currency because it's structurally, fundamentally too weak to continue on that role.